This segment sponsored by Foster Financial. Welcome to Money Monday, focusing on providing women with financial insight catered to them. And joining me is Caleb Doane, the Vice President of Foster Financial. Good morning.
Good morning.
How's it going?
It's going well. How are you doing?
Doing good. Okay, so let's jump into it because last time we were talking about HSAs, okay, and all about the healthcare expenses that go along with it. And so we're going to kind of expound on that a bit more today, right?
Yeah, that's absolutely right. We kind of talked about how there was a study that came out that showed on average women are typically spending more than men on out-of-pocket medical expenses. And so it's important for everyone to plan for medical expenses over the course of their career and even in retirement, but it's especially important for women because it's going to be a little bit larger of a percentage of their overall expenses than it is for their male counterparts.
Right.
And so we talked about how HSAs are a great way to plan for that. It's basically an account where you can save and invest for qualified medical expenses. I think today I kind of wanted to focus on how I've seen people maybe misuse HSAs or not use them to their full potential.
Right.
And so I guess the first way that I've seen people misuse HSAs, I guess I would say, is when they come to us, they've saved money in the HSA for the past 10 or 15 years with their employer. Maybe they use a little bit every single year for certain out-of-pocket medical expenses, but overall it's grown. Now that's a great start, so that's certainly good to do that.
Right.
But a lot of times when I look at the statements, the HSA is completely in cash. So it's not generating any sort of interest, it's not invested in anything, and it was just sitting in cash while the market was going up over the past however many years.
Yes.
And so there was a missed opportunity there.
Right, because last time you had mentioned the fact that you can actually invest these funds. And I think that is something that's not always communicated by the employer when they're breaking down, hey, do you want this savings account or not? Because I remember when I first learned about HSAs in my first corporate job, I was like, oh, I can't. So I'm putting in money that I have to spend on medical and I can't touch it. So it was very confusing. But the fact that you said that you can actually touch that money to move it into an investment account. Kind of break that part down for us.
Yeah, so sometimes it's right within the HSA at work. If the HSA is held at Fidelity or wherever it might be, you could call in and say, hey, I want this invested, and they can give you certain investment options. Sometimes the HSA at work might not have investment options built right into the plan.
Okay.
And so you would actually need to take a portion of it, move it to an outside HSA account that does allow you to invest it. And that's where we as investment advisors can actually manage that for clients too.
Yes.
But even if there are very limited investment options in your HSA that you have at your employer, I would typically encourage people at the very least, depending on somebody's financial situation, to at least have the assets in something like a money market fund that's generating interest for them. It's still a pretty conservative type of fund, but it can actually generate some interest. Whereas a lot of times the statements that we get, it shows that somebody had $30,000 in the HSA over the course of the year, and they got zero interest or $10 or whatever it might be. And not only are they missing out on that interest, but all of that interest is completely tax-free as well, as long as you use it for qualified medical expenses when you eventually take it out. And so it's a great thing to take advantage of, but more often than not, when I see the HSAs, they're completely in cash.
Yes, and is there a minimum amount that someone has to have before they can actually turn that into an investment opportunity?
It's a great question. It varies by provider, but a lot of times they'll say, hey, you need to have $1,000 or maybe $2,000 in cash in the account that you can use. If you have a debit card for the HSA, then of course it comes out of the cash. But then anything over and above that, you can invest. So it depends provider to provider. I don't think there's like an IRS rule on it, but anything over and above that can certainly be a helpful thing to invest in the market.
Okay, and you mentioned the misuse of those accounts. Is there another way that that people may tend to misuse it and don't know about it?
Yeah, the other strategy that we like to leverage for clients is what we call shoeboxing your receipts for these HSA accounts. And so this is where if a client has the ability during their working years just to pay out of pocket for their medical expenses, as opposed to actually swiping their HSA debit card and using the money in the HSA, If they pay out of pocket, it allows that money in the HSA to not be used. And therefore, if that money is invested, it can grow for a longer period of time. So for example, they limit the amount that you can put in the HSA too. So I mean, if you're also taking money out, it's limiting the amount that is in the HSA in total. So for example, if somebody had a $1,000 expense come up, they have the money in their bank account, but they say, hey, I want to use the HSA because I have it here for me. Well, they use the HSA, that $1,000 comes out of the HSA, and now of course it doesn't have the ability to grow. That $1,000 is now out of the HSA. If instead they paid out of pocket for that $1,000, which, if they could afford to do so, then maybe we would advise that. That $1,000 could then be invested in the HSA, and then maybe 15 years from now, it's $2,000 or $3,000 or $4,000, depending on what the market's done.
Right.
So sometimes we have people avoid using the HSA now in order to kind of earmark it for retirement. And the shoeboxing piece is that sometimes people will say, okay, well, what if I save all this money for my retirement medical expenses? But then we get to retirement and maybe I don't have as many expenses as I thought I would. What if I have 50 grand in this HSA and I don't have the expenses to get it out? Well, right now, there is no limit on the time that you can take to pull money out of the HSA and use it for the qualified medical expenses that happened in the past.
Huh.
So if you had an expense
you're
from
talking about retro.
Oh, exactly. Yeah.
Okay.
Yeah, if you had an expense from 5 years ago and you saved the receipt, 5 years from now, under the current law, you could pull money out of the HSA, show them that receipt and say, hey, this is totally tax-free.
Whoa.
And in the meantime, it allowed that money to grow. And so you get to pull out.
I didn't know where you were going with this.
Yeah, I know that. Yeah, the shoeboxing.
Okay, the shoebox receipt thing.
Right.
Okay.
So yeah, it's essentially, save the receipts in a shoebox. Most of the time, this is actually just a file on your computer.
Right. I was about to say a digital file.
Exactly.
15 years, that receipt will not be able to be read.
Right.
Okay, so. Okay, that's really cool. But then let's just say that they don't have receipts. They've collected $50,000. They're in an older age. They don't need it. You can still use your funds for other reasons, but it's just like penalties or taxes. Like what happens if you need to pull it out for non-medical reasons?
Yeah, so after 65, there's no penalties for pulling it out for non-medical expenses, but then you do pay taxes on it when it comes out. So, if you had a large amount in the HSA and you were getting to, 65, 75 years old, whatever it is, we could have people start taking withdrawals. So that's at, I want to say 65 that you're able to pull it out with no penalties. There'll just be some taxes if it's not for a medical expense. But I would say 90% of the time, people have a lot of medical expenses in retirement. They have no problem spending through the HSAs.
Yeah. Okay. Well, thank you so much, Caleb, for breaking down HSAs more for us.
Yeah, you bet. Thank you.
And Foster Financial is here to help women plan for retirement. So you can call them for a free consultation. Their number is listed below, and I'll see you after the break. This segment sponsored by Foster Financial.